Welcome! I want to dive into some of the economic activity that is out there and things that should be on your radar. Now, I want to ensure that you have a clear understanding of what's happening with the financial world and how it can affect your investments. So let's dive in. As we get started, I want to talk about economic and stock market risks. I want to kick things off today by addressing some economic and stock market landscape items that are out there. Now, you may actually have some questions about the recent events and policies from last week, so I want to break it down into some simpler terms. Now, you probably have heard the buzz about the Federal Reserve's policy decisions last week, and it's really something that is left kind of a lot to be desired with respect to their thought process and how they're really communicating this. And it's really reminiscent of Jay Powell's mistake, what we called his rookie mistake, back in 2018. You see, the Federal Reserve in the latest meeting last week on September 21st resulted in what's really been termed a hawkish pause. Now, yes, they removed their forecast and even raised their expectation for the 2024 Fed funds rate. Now, here's what it's doing. It really is shifting their stance and raising some eyebrows in doing so. Because up until now, they have been forecasting what they call a soft landing. And it's something that they are saying that we will not have a recession and we can get through this period of time very easily. But the federal chairman, Jay Powell, actually caused quite a stir, because initially he actually backtracked away from that soft landing stance and forecasted, saying that he's thinking that we are going to go into a recession. So this created a lot of confusion in the markets and really led to a surge in bond yields. Now, the inconsistency here in the message is really raising concerns. So a month ago and a week ago, they were saying two different things. But again, on that exact same day last week, the former Federal Reserve chairman, or in this case, chairwoman, Janet Yellen, said, we're really on a good path towards a soft landing. So which is it? And that's really what's going on here. There's some inconsistency in the messaging that is coming out of our government. And what's going on now is we're trying to manage all of this confusion in the stock market. So summing it up, really, it's really fair to say there's uncertainty in the economic and stock market landscape, and the Federal Reserve's actions and messaging has really left us scratching our heads. Now, here's another point of concern, that the US 10-year Treasury yield, which is reaching a new high of 4.44%, is surging really because of the fact of what the Federal Chairman Jay Powell's comments about inflation and bond yields said. So here's what we're trying to figure out. Is Jay Powell being truthful? And if so, he really left a lot to be desired last week. So when we talk about all of the inflation aspects here in our lead 3 forecast, which is saying we're going to have a slowing of economic growth but a rising inflationary environment, that's exactly what we have been talking about. And right now, I think the Federal Reserve is even starting to see that as well. And that ties into portfolio changes that you should consider. Now that we've touched on the economic and stock market landscape, let's shift our focus to your portfolios and some potential changes that you should consider. Now, first and foremost, it's really essential to understand that there will be times when owning long-term bond funds will be advantageous. However, that time is not right now. So yes, we're closely monitoring yields and bonds and all of that stuff, and it's possible that later this year, once we reassess the suitability of the bond investments, that it may actually be a good place to be invested. And we'll let you know that. But for right now, we are looking for them to actually be a hindrance to your portfolio, not a help. So keep that in mind when you're looking to invest into bonds, that long-term bonds are definitely not the place to be invested as of right now, and something you should be taking a look at for your own portfolio. Now, there is a however here. There is something interesting that we talked about last week as well, and a development that has really been over the course of the last couple weeks, that short-term bonds namely 1 to 3 month in terms, are now becoming actually something to invest into. So they're actually really starting to attract attention because they're offering this high yield in dividends, and it's something that is now a little bit of a better opportunity than what they were even just a couple months ago. Now, yes, this is because of the high interest rates, and simply put, as your money is working harder for you, you should actually consider these types of bonds as a way to boost your dividends and interest income. So that is definitely something to be looking at for your portfolio. But there's also a couple other intriguing options that are really starting to pick up as well. And one of them, I bet you've never actually considered, at least recently. Uranium. Yes, you've heard that right. Uranium. It's really gaining traction actually right now as an inflation hedge. And it's a really unique investment opportunity that we're keeping a close eye on for many of our clients. But I wanted to let you know that you could look at this as a potential inclusion into your own portfolio. But like I said, there's one last area also that we're seeing opportunities in, and these are life insurance companies. You see, life insurance companies are becoming more of an attractive investment for your overall investment strategy, just simply because of the fact that they have the ability to raise rates for their clients during inflationary environments. So now when we go to invest into them, they actually may be an inflation hedge that we're looking for. So those are a couple items that you could be looking at as part of your own portfolio. And that leads us to wealth management and advanced planning. As we begin our time with this, let's talk about the fundamentals but often overlooked aspect of updating your beneficiaries. Yes, life changes, and then it's essential that you update your accounts to reflect those changes accurately. So whether it's a new addition in the family or changes in your personal circumstances, it's crucial to ensure your beneficiaries are up to date. And it's not just about financial changes. Personal changes really matter too. So take a moment to consider these and if there have been any significant shifts in your personal or financial life. Have you bought a new home? Started a business? Experienced any life-changing events? Well, these factors can have huge implications for your wealth management strategy. And one question that arises is whether you should change beneficiaries on your accounts. Now, this is really a decision that you should be carefully considering, and we're here to provide some guidance, yes. Your beneficiaries play a crucial role in the distribution of your assets, so it's essential to align them to your current wishes. Now, we recommend looking at your accounts like life insurance, your annuities, pension accounts, your bank accounts, your retirement accounts, wills, and even your trusts for all the different beneficiary aspects, because these are all pieces of the puzzle that make up your financial picture. And regularly reviewing these in a proactive way will ensure that your goals are effectively being met. So remember, this is not a one and done task, and we strongly recommend that you make this really a yearly habit. Now, the financial landscape can really change, so with your circumstances, keeping up with these changes, ensure that you'll always be in control of your financial destiny. Another aspect today that I want to mention is our second opinion service. We've covered quite a bit of ground today, but I wanted to talk about one essential piece that we offer. Now, this is a valuable service that is here to provide you peace of mind. We call it our second opinion service, and is really designed for you and your goals. Now, here's how it works. First of all, we're going to have just an introductory time just to understand where you're at. Now, this is really going to lead into then a discovery meeting, and we're going to continue to ask some questions to understand where you're at financially today and where you want to go in the future. Now, following that discovery meeting, one of three things will happen. First one could be that you're in an excellent financial position, and we are going to let you know that. The next thing that could happen is that there may be some minor adjustments, and we will help you to align those adjustments with your goals for the future. Now, the last aspect could be that there are some actual substantial gaps in your overall financial plan, and we're going to provide a comprehensive recommendation on how to address those gaps. Now, this service here is really a testament to our commitment to your financial well-being. And if you could benefit from a second opinion on your overall wealth plan, please let us know. We're here to help. I want to emphasize that your financial success is our top priority, and we understand that navigating the ever-changing economic and investment landscape can be challenging, and that's why we're here to provide guidance and support. Now, we'll keep you informed in ensuring that your investments align with your long-term goals and your risk tolerance. Of course, your wealth management and advanced planning are an ongoing process here, so regularly reviewing and updating all of your financial strategies is a way to stay on track. If you ever have any questions, please don't hesitate to reach out to us. Take care.